right, Mark, today we are going to talk about Wall Street's hottest trend, SPACs. So this is really interesting. I feel like it's everywhere these days. Let's just break it down. What does SPAC stand for? What is it?
Sure. A SPAC is a special purpose acquisition corporation. And essentially, it's a blank check company. So you're giving a group of investors or investment professionals a blank check to go out and make an acquisition of some sort. And often it's a company that's a privately held company that wants to get listed or go on an exchange. And the way to do it, and a quicker way to do it, as opposed to the traditional listing route of an IPO or initial public offering, is to actually partner with a SPAC who has already raised the money, and then we'll determine what company to acquire, and then they'll acquire that company and then convert it into a publicly traded company, essentially.
And now, is this for the investors? I mean, IPOs can be very risky, right? I mean, we hear all these things that are really hot. You get in and then everything's overvalued. Is it safer? Is it a safer investment to do a SPAC versus an IPO?
So it's a time-honored tradition to have a hype cycle with an initial public offering.
I like hype.
Part of that is because they want to raise the price as much as they can at the initial offering level. So that's when the company raises money typically. And so you have a number of underwriters, the big banks on Wall Street, they're all underwriting the stock. What that means is they're going to get a commission for taking that company public, bringing it to the market. So they'll do road shows and introduce you to a number of investors. We've had two different phenomenons, though, the last couple of years. One is the SPACs that you mentioned, and then two is something called direct listings, where the companies are already well known and investors already know who they are. And instead of having an underwriter, they go direct to the market and direct list, so then investors can access those shares immediately. And so we've had a few big ones. Coinbase was probably the most recent one where investors knew them, but they went direct listing, didn't have a traditional roadshow like you would in an IPO and the hype cycle that goes with it.
Yeah. Now, one of the things that I wanted to talk about, Mark, was also just how popular these SPACs have become. So this graph here, if you just look at 2012 to 2020, it's crazy. WeWork, DraftKings, Open Door, they all went public, merging with SPACs. 200 SPACs went public in 2020, raising $64 billion.
This is what happens during really a booming bull market when there's a lot more money sloshing around in the system. And that's why you don't see it previously. And this is really a way for investment management teams that think they have good ideas and can find privately held companies to really access the capital markets, grab capital, but they're also getting paid to do this, and they have a special deal and incentive in there. So when we do the analysis, we represent the end investors, and we would say they're not always great deals for the investors. They're great deals maybe for the companies and maybe for the SPAC sponsors, that's the investment management team, but they're not necessarily the greatest deals for investors because a lot of the gains are going to go to the founders of the company and then also to the investment management team that has this. So we'd say it requires much more due diligence on these SPACs when you're trying to allocate capital.
So you explained why they're so popular now. Quickly, how long do you think they'll stay this hot?
I think they'll ebb and flow. I think they're going to cool off, and they have cooled off in 2021 in terms of the performance. But I do think there's enough money looking for private equity deals to go public that we're going to see that continue, especially if the bull market in stocks continues. We'll see more and more companies want to raise capital and access the capital markets.
And that's $1 million question, right? How long the market will stay this way. All right. Mark, thank you so much.
Thanks, Erin.